Hello guys, welcome back to another lovely trading video. In this one, I'm going to be doing some in-depth stock analysis on SIGA, ticker SIGA. Now, reason for this is it is one of the leading gappers on today. You can see we're recording this around 1 p.m. market time, and it is currently up around 41%. So we're going to start off with the analysis on this, and we can see it's been a pretty steady climb on the day, which you don't actually always see with these momentum stocks. They tend to be quite volatile, even intraday. But either way, we'll go straight over to these standard deviation channels. But one thing to account for is, I'll quickly give a glance, there's not many targets to the upside. So knowing this beforehand, really the main resistance we're looking at when you're looking at it, if you're long it and you're trying to get targets to the upside, is really we're just going to be looking at psychological resistance levels. So by that I mean the whole dollar, so when we're coming into $14, and really the half dollars as well, you know, the $13.50, the $12.50, kind of the 50 cents marks. Really, because the stock's over $10, we're going to ignore the 25 cent and the 75 cents resistance, because they're just not going to be as heavy on the stock valued, you know, usually above $10. They don't tend to have as much strength, even though it is kind of pulling back on that 75 cents now. But really, whole dollar and half dollar are the resistance we'd be looking at to the upside. But now going on to the standard deviation channels, we can start seeing where will our targets be. And like I said, the stock kind of already pushed above these deviations, which you don't really see that often. And when the stocks do that, basically you know they're going to fall, because stocks really can't stay outside these deviations for long. So even if they stay out there for, you know, a day, two, it's unlikely for them to really stay out of this level for a week or so. Knowing this information, SIGA, if you can short it, is probably one that's, you know, good to short. The only risk obviously you're taking is in the stocks it could go up another $10 before it ends up crashing. That's obviously always a risk you have to have on these very momentum stocks. But either way, we will plot out our support and resistance line so we know what we're looking at when prices do start to fall. And these are levels, if you're short, maybe you want to start covering shorts. And if you're looking maybe for small bounce plays when it comes into these support levels, these are going to be the levels we are looking at. So here are all the levels that we're looking at. So $11 and $10.70. So again, these are supports on the downside when they're coming down, and you can see they did even work kind of intraday today. They were used as resistance, came back, used as support. And that's what we're talking about, how you can use these levels for small bounce plays. When the stock falls, comes into these levels for the first time, then it's something you could sometimes look to play, because you'll tend to get some buying pressure coming into this level. Even if it's going to fail overall, you tend to be able to get a good few percent before it starts to fall. But either way, these are going to be the key levels. So yeah, $11, $10.70, $10 and $9.75, $9 and 11 cents, and $8.80, $8.20, $7.90. and $7.25. Now $7.25 is a key one to be looking at. Obviously that's quite far where we are from now. Price needs to drop 50%. Not unlikely to see that, because we would expect this kind of stock just to fall back to where it was, you know, in a week or so, maybe a bit longer, but we expect it to kind of reverse to that level anyway. But that's if you are short, where we'd look to be out completely, and the reason for that is the statistical mean. And when we're trying to trade stocks, like right now, when they're very overbought, we try and short them and trade them into the statistical mean. Once you get statistical mean, it's a lot more of a gamble whether they go up or down, so we tend to just get out of the trade when we come into there, so we don't have any unnecessary risk. But yeah, either way, these are going to be the targets when again, if you're shorting, let's say at this $14 level, those are the levels we'll be looking to cover into, or the key levels at least that we'd be looking to cover into. And again, if you're looking for small bounce plays, such like the ones we had today, where prices kind of fall into these deviation levels, then you could look to play them that way. Now, one thing we did want to go into, we don't really use them often, but that's going on to a 3-week chart. And the reason for that is it just gives us some higher up deviations for some extra levels of support and resistance. And really the only level we can add is around this 1240, 1235, and that's a fourth deviation on the 3-year weekly chart, sorry. So if we see that, again, we can see if it had any intraday support or resistance, and again you can kind of see it did definitely have some hesitation when it comes into this level. but that is one that we don't tend to use as much. So again, we'd really more focus on the $11 to 10.75 and kind of these ones all below. This 12.40 is if you're just looking to maybe get a nice scalp trade, or again, if you're shorting at the $14, this could definitely be a good first target to make sure you don't end up losing money on the trade. But really, we can only give targets right now to the downside because this stock is very overbought right now. And what we can see is that, we would expect it to fall. And what we're even seeing is if you look over at the RSI, either on the 4 hour or the daily, is that we are starting to have a divergence. It does look like if we do break this high, it will be diverted. And again, that's just showing that the momentum on the second run is a lot weaker. So overall, we are more kind of bearish on this stock. If you're buying to go long, hopefully, you have a strategy to get in with that, but at least off, a mean reversion outlook on the stock, it's definitely something we'd be more bearish looking at with the targets below. So overall, I hope you enjoyed the breakdown on SIGA. If you did, don't forget to drop a like and subscribe. Come back in 2 hours and you can watch an analysis video on Costco. And that's it. Peace.
Maybe I'm crazy.